Hello guys, welcome back to my channel once again. Today this is CNM on the screen. You are watching CN Great Counsels of Forex Trade, and in today's video I'm gonna be giving you yet another life-changing strategy. A lot of you said that my previous strategy, the ADX bomber was the best, but I replied some comments that the best are yet to come, and the video you're watching right now is going to be one of the best. I wouldn't say it's the best, but it's going to be one of the best if you stick to the conditions I'm going to give you right now. I'm looking at this trade now. That's going to be a promising one. Okay, I have my reasons for always taking trades like this, and also coming to chart when the conditions are met, so that we take the trade live and then you see how it goes. So I'd like you to look at this place. Take a look at this place. Take a look at this place now. Okay, let me remove the brush, but I want you to take a look at this place. Just look at my annotations. Take a look at this place. Take a look at this place. The black line you're seeing is moving average, okay, and then the light green you're seeing is ATR, average true range. I'm going to give you the setting to the strategy, but I just want you to take a look so that you know when the conditions are met. This is boom 1000. Please, this strategy you're going to be trading with it on boom 1000 mainly, but you can also trade with it on crash 1000, right? So if I make this move now, you discover that the place I just showed you is not moving. The two indicators just met there at the spike and then it spiked. Okay, you can actually use this to catch spike, but that's not what we are talking about now. We are talking about trading ticks. So look at this place. Okay, let me shift the chart. Is it shaking? It's not moving. That is the first condition. The first condition is that it must spike. It could be a single spike, it could be a double spike like this one. When the first spike came, okay, the conditions perfectly met. That is the first condition. Okay, and then the second spike, and now it's still going down, right? So what are we waiting for now? We are waiting for a crossing. Remember that this meeting of the ATR and the moving average has to be at the 10th level of the relative strength index, the 10th level. Okay, this is level 10. We have level 30, level 70, and then level 90. This is level 10. Where you're seeing is level 10. So what are we waiting for now? We are waiting for a crossing between the moving average and the ATR above the 70 level of the relative strength index. So whenever it spikes like this and then there is a cut between the ATR and the moving average at the 10th level, just as you can see, and then the most profitable one is the one that when you move the chart like this is not shaking. Just take a look at it. Is it shaking? No, it's not shaking. Once that condition is met, there is a cut, okay, just as you can see here now at the 10th level. Then the first condition is settled. Then you wait, because the spike is going to take the ATR up, just as you can see. Spike is going to take it up. So while it is descending, the moving average will be ascending. While the ATR, that is the light green line, will be descending from up, the moving average will be ascending, moving up. Okay, so we are waiting for a crossing between the moving average and the ATR at the overbought level, just as you can see now. Please, I beg your pardon. You can use either this what is it called, either this zoom level, that is zoom level 3, or zoom level 2. Okay, now you can use, this is zoom level 1. When you zoom out completely, it's zoom level 1. You can use either zoom level 2 when you zoom in once, or zoom level 3. So we are using zoom level 3 now for this particular trade. So you can make your choice. Now if you don't understand market structure or any other thing you need to combine, please, I advise you to use zoom level 2. Okay, but I'm using zoom level 3 right now. So I'm waiting for a crossing at this point. I'm waiting for a crossing at this point. Okay, anywhere above the 70 level. Okay, now as soon as it crosses, now let's see, we're going to wait for at least 1-2 candles, and then in most cases after 2 to 3 candles this ATR will shoot down. Please, I beg your pardon. In most cases after 2 to 3 candles this ATR will shoot down immediately. So that will be after the crossing. After the crossing, then you have 2 to 3 candles, the ATR will shoot down. So it is after the crossing, and then you now allow 1 to 2 candlesticks to close, to open and close. That's why you're going to take your trade, and then you take 10 candlesticks. I'm taking my time to give you the conditions so that when we are done with the conditions and the conditions are perfectly met, I'll give you the settings and then we will say goodbye. How many candlesticks are you taking? You are taking 10 candlesticks, counting from where the crossing took place. Counting from where the crossing obviously took place, right? So, and then where is your chart positions? Where is your chart position? The crossing did not take place. Where is your chart position? Your chart position has to be here, where you have the dollar sign. That's where the chart position has to be, right? So that's just it. So we're going to wait for the conditions to be met, right? All right, so sorry guys, I had issues with my recording, but just take a look at where the crossing later took place. Remember, if the crossing did not take place, obviously you do not take the trade. You discovered he wanted to cross here and then he spiked. He gave us this spike, okay, and now he later crossed here. I'm sorry, I had an issue with my recording, but I told you that immediately after 1 or 2 candles is going to shoot down, that the ATR is going to shoot down, okay, and then see how he later shut down. He shut down now. He shut down. Okay, so we are taking a trade right now, and we are taking 10 candlesticks, right? Let's take on 1.5. Okay, taking on 1.5. All right, and then let's see how it plays out. Okay, I mean, you can, if the conditions are met, you mustn't take up to the number of trades I'm taking. Of course, I know how to hold it because I have the equity that can hold it, right? So the crossing took place here. This was where the crossing took place. Okay, and I told you that after 1 or 2 candlesticks is gonna shoot down. Okay, it's obvious. So we're gonna place our vertical line at the point of crossing, and then we are taking 10 candlesticks from where it crossed. Okay, it doesn't matter the small spike that just came in. Now we are going to stay right in this market till we exhaust 10 candlesticks. But before then, let me quickly give you the setting to this strategy, right? So I have here, of course, on my main chart I have my fractals, and then these are the parameters. Then we have indicator window 1. Over there we have average true range. It's just the default setting. Okay, the default setting. You don't really need the levels, right? Don't really need it because we are making use of the levels that is on the relative strength index. So you click done. Then we have the moving average. Okay, the period is 14, shift is 0, method is exponential, you apply it to close, and then we have the styles to be 3 pixels, color is black. You can use any color of your choice, right? Then you click done. The third indicator we have there is the relative strength index. Period is 7, you apply it to close. Styles is 1 pixels, color is the color of your background. We don't want the color to show, and that's why we have this place to be white, because my background is white. If your background is black, you can make this place to be black, right? So then the levels, this is where you have to take note of, right? We have 30, 70, 90, 10, but what matters most is the 90. And in fact, the levels, they all matter, okay? They matter a lot. And when we get to the chart, I'll still remind you the use or the importance of it. So you click down, and then let's get back to the chart and see what we have over there, right? So yes, we are still on the trade. We are counting 10 candlesticks, okay, irrespective of this flute spike. Okay, we are taking 10 candlesticks from this point of crossing, okay, where we have our vertical line. So we have taken 1, 2, 3, 4, 5. Okay, so whatever be the outcome after 10 candlesticks, we are closing the trade, right? So let's quickly do a little back test before the end of that, right? Now you look at this place, okay. It came and then it hit both the moving average and the ATR hit here, okay. That's the first condition, right? So now when it hit, it spiked up until it got up. So you are now waiting for when there will be a crossing between the moving average and then the average true range above the 70 level. So eventually it came to cross. Now if it doesn't cross, because there are some times that the moving average will stay all through below the 70 level until another spike again that will come. Now it is also possible that after a spike, the average true range won't get above the 70 level. So if none of those happen, that is if both the average true range and the moving average does not cross above the 70 level, that is if it does not cross above the 70 level, then you do not have to take the trade. You do not have to take the trade, right? And that's just it, okay. Now look at here as well, okay. For instance, here both hit here, right? But then the moving average never got up to the 70 level. It rather curved and continued downwards, right? Okay, now you are not supposed to take such trade. This was not valid, right? Then take a look at this. This was valid here, and then the crossing took place here. So let's count from there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, and still counting, right? You would have taken your 10 candlesticks and you are out of the trade. Now take a look at this place. Okay, these ones are not valid. Okay, take a look at this one. Just a look at this point. Look at it here, and then the crossing took place here. Okay, just take a look at this place. This was where the first condition met, and then the second condition met here. Now if you count from here down, you would have taken your 10 candlesticks, right? So this place, it wasn't met here as well. It was not completely met, but here it was met. Look at it here, then look at where the crossing took place. I've taken your 10 candlesticks and you are out of the trade, right? So yeah, that's just it, guys. Let me quickly go to now. Look at this place. It wasn't met. Okay, was it met? Yes, it was. Remember that this is your chart position. The dollar sign. So the first condition met. Then look at it here at the 10th level. Then the crossing took place here. We have counted. Let's put our vertical line to see if we can cut up to 10 candlesticks right from that place before the spike. Now let's count. This is 1 2 3 4 5 6 7 8 9 10 11 12 13 before the spike. Please stick to 10 candlesticks. Stick to 10 candlesticks. Look at it. The condition was perfectly met. Look at it. I want you to trace it down. 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 Look at it. This was the 70 level. So you would have taken your 10 candlesticks and you are out. Okay. Now, don't forget the conditions, right? Don't forget the conditions. So they are everywhere. And then let's quickly check on crash 1000 before we say goodbye, because our 10 minutes is actually approaching. Now the opposite is the case for crash, right? For the crash, the moving average and the ATR must meet at the 90 level this time. They must meet at the 90 level. Okay, it works better on boom 1000, but if you have a valid one on crash 1000, then you are good to go. You are good to go. Now this was a perfect one. Okay, this was a perfect one. Look at the point where they met at 90 level of the relative strength index, and then the spike will now shoot the ATR down. Okay, now let me remove my brush so that I will explain very well. He spiked here and then he pushed the ATR. Okay, he pushed the ATR up. He still pushed it up, right? Okay, the ATR was moving down, so when it spiked, he pushed it up, and then the moving average was up already at the overbought level. So the ATR moved up to make a touch with the what is it called, moving average, and then the moving average will now start descending, right? And then the ATR will move to this point and start descending as well. So when it shoots down, look at where they now cross. So the crossing between the ATR and the moving average for crash has to be below the 30 level, and it must be below the 30 level. Why the first condition has to be that they will meet at the 90 level of the relative strength index, just directly opposite of what I said for crash. So let's quickly check on our trade to know if we will now say goodbye for today, and let's count. Okay, let's count 10 from there. It's above 10 already. This is 1 2 3 4 5 6 7 8 9 10 11. So that's it, guys. Please stick to the conditions, and then I will hear your testimonies. Already I get tons and tons and tons and tons of testimonies from the recent videos and strategies we've uploaded online. Look, I've looked at what is happening from higher time frame already. You have seen that I have my trend line. There are analyses that have been made on this chart already. That's why I am also holding, even after I end recording this video, I may still hold till further notice, because there is a bigger analysis from higher time frame, right? So that's just it, guys, and I'm gonna end the recording right now. But please, if you've not subscribed to this channel, kindly do so right away. Kindly do so right away. You can actually trade with this strategy on higher time frame, but please, I advise you to stick with 1 minute time frame. So please subscribe to this channel, give this video a thumbs up, like, share with other traders, leave your decent comment, and CN Great Councils will talk to you in my next video. Bye.